do you think skills that matter going forward for your children?
I think being relevant in today's technology. I mean, you never stop learning. That's my lesson to them. I mean, I always say to myself, all I learned in university were to look things up in books. It was only 2% of what you learn. Seriously.
Yeah.
It's a nice 4-year paid holiday by your parents. You learn other social skills like, going out for drinks with your friends, or, seeing the world and doing all that stuff.
And meeting girls as well, right? Meeting girls. Yeah, right.
The important thing is that, you learn social skills. And don't forget, social skills are a very important part of life now. People with good EQ get ahead of anyone else. Being liked by a bigger crowd of people gets yourself promoted, because that's the kind of persons companies seek out, influencers and people who can sort of shape decision making.
Yeah.
Yes, men are definitely out of the way. So I always teach my son, to keep on learning, never stop learning.
Before we begin the podcast, have you gotten your free ebook? It's called the Build a Six-Figure Portfolio Guidebook. Now, inside it, we share with you the tips and tricks to bring your stock investing skills to the next level. The best part, it's only 10 pages long and it's totally free. Whether you're on Spotify or YouTube, the link to download is in the description, or you can go to www.firl.co/FREE or www.firl.co/free.
Good day, everyone, and welcome back to the FIRL podcast. MJ, how are you today?
Welcome. Well, we as we record this, we are on the verge of having a new prime minister.
Oh yeah,
right. That's very interesting news. But the prime minister is not as special as our guest today.
Oh,
from my point of view, at least.
Exactly.
I'm not too sure. At least one thing I know, that this podcast will go down in history.
Oh yeah, definitely.
We have a new prime minister. Okay.
Yes. just an interesting fact for you too, Dato Stewart. MJ and I, we left our we tendered our resignations at our previous company on the same day Tun Mahathir actually resigned. So we will remember that day also.
All right.
We were earlier. We were early. He copied us.
Yeah, he copied us. So on our guest on our podcast today, I consider him a friend. I've been on stage with him many times, and I've even followed him way before I was even had the privilege to share a stage with him. Welcome, Dato Stewart LaBrooy.
Thank you, John, and thank you, MJ, for the opportunity to speak on your new platform. It's interesting.
It's our pleasure.
I've been following you quite religiously since I learned about it, and I think it's a great idea. People need investment advice, and I think it's something that's so important. I mean, everyone's a novice. In fact, myself, I keep telling you, I want to come and do a course with you guys because I'm not that good at investing. I'm quite lazy. That's why I tend to keep all my money in REITs, more or less, because you only get the dividends and then lock the stock and forget about it. It works very well like that. I can't be bothered following stocks and all the nuances that go with the bad announcements, bad press, good press. Hard to track them. And I don't chase stocks either, as a rule.
Good. I mean, fantastic golden words for a lot of listeners out there as well. Don't chase the fads.
No, never chase the fad.
Yeah, so maybe I just want to introduce a little bit of Dato Stewart, and I'm going to tease him out for a better introduction. So for those of you who don't know, Dato Stewart LaBrooy is a legend, in my view, in the REITs industry. I followed him ever since he was in Axis. So maybe I want to go a little bit before that, Dato Stewart. What was a 15-year-old Stewart LaBrooy like?
Oh, tell you the truth, I was actually finishing my school. I was quite fortunate that when I started school, I got double promoted. So I finished my O-levels when I was 15.
Wow.
And so I took a gap year when I finished. I went to do my Form 6 and I left to go to the US for a year.
I see.
So, just imagine 1967, okay? They weren't jumbo planes, okay? My route to the US was quite torturous. I had to really fly to Manila first, and then we had an orientation. Then we flew to Hawaii, because that's as far as the plane could go. And then we got off there, and all of us had to carry x-rays of ourselves.
Huh?
And in order to get through immigration, they had to put your x-ray out to make sure you haven't got tuberculosis, some other horrible tropical disease. And when they sort of said, yeah, you're okay, pal. So then they allowed you in the country. Then from Hawaii, we took a plane to San Francisco, where we spent a week on the Stanford campus, which was actually wonderful. Can you imagine? This is 16, 17-year-old me, okay?
Wow.
Right. Never been out of Malaysia, never been on a plane before. The real kampong boy, getting out there right in the middle of the US, which was really at the forefront of everything. You know, Vietnam was going on. We had the whole hippie movement starting. We were 2 years away from Woodstock. You know, it was a decade where everything was going on. And the day I landed in Manila, Sgt. Pepper's album came out. Okay.
Wow.
It was that far back. And these things really stick with you. And the 1 year I spent in the US was very transformational for me.
Why was that?
Why was that?
Why was it transformational?
I met girls.
Oh,
I was in a damn all-boys school all my life. Okay, what do you think it was all about? No, actually, no. You know, the teaching that I found in the US in those days, the schools were very, very good. And you know, in Malaysia, the old system of learning on rote, you know, memorize and then exams, you just remember what you've read in the book and just copy it out. Nothing like that in the States. It was all about application and discovery. And so I rewired my brain and came back. And I never studied hard after that. Everything was easy. And that was a wonderful part. I came back and then I went on to go to UK for my university and fell in love, met my wife and came home. And then I started working as an engineer for slogged out for 20 years. Also very transformative because I learned a lot about industry there because I was actually building stuff.
Yeah.
And the funny thing was, you know, I started off as an appliance and actually built refrigerators and air conditioners. And later on in life, I went on to build gas cookers. I built most of the white goods and had a great kick out of it because I was actually designing a lot of the stuff. You know, we talk about the applications of innovation. I came in when I had a stint with Kiwat Industries and I joined the company. Remember Zanussi as a brand?
Yes.
Some of you might remember it, okay?
Yeah, I don't know whether MJ knows this. It's like ovens. They make
appliances. Italian company, okay? Two perks of doing that was one thing was I got to go to Italy once a year, okay, and enjoy the pasta and the wonderful things that go on with that. The other thing was, you know, they allowed me to do what I liked. So I looked at the Italian gas cooker, and all the burners are very small. And you know, Asian cooking, that doesn't work, right? So got the engineering team together, say, hey guys, got to rip this stupid burner out there and put a nice big wok burner in its place. And we did that. Our sales went up 400%. Okay, so from a 30% market share, I went to 80% market share. So I learned a lot of lessons about being innovative in the things we do and the need for constant change in a business in order to keep yourself relevant. So after I finished with the appliance side, I went on to run a paint company. And after that, I got involved in real estate. 95.
What a story. I mean, because I was reading through your LinkedIn profile, I didn't know this part about Zanussi because I remember when I was a kid and those were the most expensive appliances being sold at any. They
were good. They're really well built and you know, we did a good job doing that. And all Malaysian designed and a bunch of Malaysian guys doing it. And the Italians came to learn from us.
Wow.
Making it happen. So it was kind of cool. But my involvement in real estate started in 95. After I left my Kiwat experience, the person who was actually supplying the paints to Kiwat was a Norwegian, okay, very good friend of mine, Carl Mira. And he said, I need someone to come and run my paint company for me because I want to go into real estate. So I was pulled over there to run the company. And then he said, I'll give you 5 years, make me enough money so I can sell it for good profit and then come and join me in real estate. And I did that. And I joined in 95 and we started his own company. We started the Access Group. It started basically as development for industrial estates. The first really crack at an industrial estate was one in Shah Alam, section, I can't remember which section it was, Sri Muda there, that part of it. So, and then it was the Access Industrial Estate. And it was my first experience in actually building out something like that. I was fascinated with the process. Then, of course, we started building big buildings for rent. And that was the basic thesis behind it. So the group actually had a number of properties which we built out for rent. Because the business model was high leverage, okay? And little equity, a lot of borrowings, build it out, and then flip it. However, 98 came along in the middle of our great ambition, and everything came crashing down. And when you live through a recession like that, you really understand how brutal the capital markets can be.
Oh, yeah.
I never forget sitting in my office and a call came from the banks telling us that our interest rate, because we're on floating, went from 6% to 22%. I don't think any of you have been to that shock before, right? One day.
Wow.
And then Mahathir fortunately stepped in and then pegged the dollar and everything calmed down. But we still, the entire financial and property businesses in tatters. You know, Maybank was selling at $250 a share.
Wow.
And no one had money to buy. That was the problem.
Yeah.
You know, it was a steal, you know. Don't forget, they went on and did a number of bonus issues and all that.
Correct.
If you bought at 250, you'd be making about a 10 to 20 time multiple on your initial investment.
Yeah,
the dividends you gain from doing that. But then we struggled, and then we pulled through. And then came 2001. We managed to get enough funding to build Menara Access, which was our flagship building in PJ. And when that finished in 2003, we managed to lease out most of it. Okay, because post the crash, a lot of demand came into the market, and we managed to fill up all our buildings. But then we had a big bank debt hanging on our necks, and we had to get rid of it. So I put forward the plan to the rest of the company to say that we should look at REITs, because at that time it was called listed property trusts. The REIT regulation had not come out yet, but we knew that the SC was looking at it. So we started working on it. And so being pioneers, you had to go through all the pain. We put our first papers in on the first initial draft regulations. We had to pull them back because they changed the rules. And we put the next prospectus in, we had to pull it back again because they changed the rules again, because it was actually making up as went along. The first thing they said that all properties that go into REIT must have leases longer than 60 years. And that was not available in PJ at all around 55 years. So that was a no-no. So we had to get that taken off the table. And then any property being injected can't have any debt. Okay? Real estate doesn't work without debt. So that had to be taken off the table. So all these little hurdles we had to go through. And it took us 18 months to arrive at August the 3rd, 2005, when we finally managed to list. And
was Axis REIT the first listed?
It was the first listed REIT.
Oh my, okay, I didn't know that. Thank you so much for that history.
First to list, because in August 2005, when we listed, it was an amazing day because we went into the market. In fact, I'll be fair to my business partners. We took the view that we had to leave some change on the table for the investors. They gave a discount to market on the valuation of up to 40 million on a 300 million portfolio. Okay. Wow. Unprecedented. We have a big discount to market, and priced our units at was it $1.25? Okay. Opening bell 167. We were 19 times oversubscribed, and a lot of very unhappy investors. We couldn't actually give them the allocations, but we never looked back since then. It's been an incredible journey because at the time we were actually building out the portfolios. A lot of stuff was coming onto the market. Because post the crash, there were a lot of people looking to do sale and leasebacks, get their cash flow up and running. So we tapped in that rich vein of asset allocations and built out our portfolio fairly quickly with some really good stuff. It still is actually on the books today.
I see. I mean, back then, I cannot imagine. I mean, looking at the REITs markets today versus back then is almost like the Wild West. You know, based on your story. Yeah, you're making rules as you go along, right?
Oh, yeah. This SC was changing the rules. We were making any rules up. Yeah. That came later when we set up the REIT Managers Association back in 2010. Yeah. And we soon realized that if we don't get together, we won't have a common voice. The Securities Commission would not speak to us alone, individually. They needed to talk to a body. So we formed ourselves up. And we were like 7-8 years ahead of Singapore.
Yeah,
it was a very successful coming together of all the management of all the REIT companies. And today we're all very, very good friends. It works as a wonderful community and delight working with all of them. They're all pretty good at their jobs. I mean, I would say finding REIT managers or CEOs of REIT managers are finding chicken's teeth. Okay, they don't exist in the market. Tell you the truth, it's a skill set that is not readily available, and that's why they don't move much. They tend to they grow into their jobs and they learn it very well. And we all help each other along. But we've actually managed to get a lot of changes done on the regulatory side through the MRMA.
Yeah.
Malaysian REIT. We call it Mr. Ma, by the way.
Mr. Ma.
It's become our acronym for it, Mr. Ma. I wonder why they're calling it a Mr. Ma to me. Wasn't these guys talking? Oh, Mr. Ma, MRMA. Okay, got it.
Okay.
We've gone on to run very successful events in Malaysia. We cooperate very closely with APRI in Singapore. And I think by and large, I think that all the REITs in Malaysia are very well managed. Kudos to all of them. But the market is shifting, and I think that everyone in the business is now going to start shifting gears to see whether they can actually capitalize on the opportunities or reinvent the ways to do business.
Yeah. MJ, I'm pretty sure you have a question.
I mean, I'm really interested to learn about this shift that you're talking about. But before that, if you can dial back to when the concept of a REIT became a lot more concrete in the country. What gave you and your team that confidence to to be a pioneer, to take on that sort of risk?
It wasn't really a risk. We had the banks chasing us for money. Okay, we had to basically float our debt in the market some way or the other. And the first things we looked at were, let's go and buy a property company and put our assets into that. And those days, these property companies came with $900 million worth of losses. And some clever guy trying to tell me how they can restructure and make it disappear, which they do all the time, okay? And all that nonsense. So that was not getting any traction with my shareholders, that's for sure. And it got tossed out the window very quickly. So the actually listed property trusts were in Malaysia since the 90s, but they never took off. And they're trading at 50 cents to the dollar in terms of valuation. So the SC saw what's happening in Singapore. I must thank Singapore for making Malaysian REITs happen, because interesting story, when they started off, they were not successful. In fact, the first REIT they listed was Capital Malls. They had to pull the listing and reprice it again. No one knows about these things, but they had to pull the listing and reprice it, and they went back to market, and then they make it happen.
Wow.
And then it's followed very quickly with the Ascendus. They were number 2. And because Ascendus was the industrial REIT, they became our mentor, or our model we wanted to follow, because we had no base. It's like make it up as it goes along. We didn't know how to really run a REIT, and they were quite well structured because they had a lot of experience. So I rang up the CEO and said, can I come and see you? He was very kind, I will say, give them credit. They said, come on down and we'll show you what we do. And I did. And so we went on to learn how they did it. They basically gave me the full tour on how they managed their REIT. And we came back and we followed what they did very, very closely. And we actually a mirror of Ascendus REIT in Singapore.
Wow.
So they were a great mentor and a great model to follow. And that was partly anchored in our success. We had a very good base to work from. And that was the main reason why we started the REITs.
Right. Great.
Back then, when you gave, I'm loving this already. You're giving us a history of what a lot of people don't read about in the news.
No, it was never written up.
exactly. And that's why I'm loving it. What were the early struggles of any of these REIT players? I mean, this is way before you had Mr. Ma, right? I mean,
That's right.
You had independent voices. And what were the main challenges of these individual REIT players, if you were to, I know you guys were very focused into industrial because you follow Ascendus, but what about the other guys who were like in retail spaces, or those guys in, we've seen even now hospitality and also hospitals? What were collectively, what were the common challenges, and collectively, what were the individual challenges of each different niche of the REIT?
You see, many of the REITs that came after us, we were also sponsored REIT. We put our assets in to begin with. But after that, we very quickly bought outside the system. You know what I mean? We didn't have our own assets to inject in. So our pipeline came from the market. And thankfully, there was enough good quality assets for us to do that. People like YTL, they had their whole portfolio of, Lot 10 and the entire sort of the shopping malls and the hotels and everything like that. Very big. They're much larger than us. And he came after us. And the thing was that I think he wasn't very happy the fact that we beat them to it. But when they did list, they said, we may have been second, but we are the biggest. Fair enough. We're not arguing with that. Okay. So we all went our own ways and did what we did, They found success because they had a lot of assets on their books, which they could put in over time. I can't remember who the third one who came on board was. I've got to really work on the history of that.
Yeah.
But, there was not that many in the first 5 years. It started to pick up after the Asian financial crisis. That's when people like Sunway, Pavilion, all the others came on board with very large offerings. KLCC was a very interesting one because it was the first hybrid structure ever done. It was like a staple REIT.
Yep.
And no one's copied them since.
I see. Why is that? Why is that so? I mean, they're very unique, yes, but why?
Because
why?
they listed first and they had to convert to being a REIT. So the existing structures that were in there, they couldn't actually divorce the manager out of it. It was being internally managed. So when they listed it, the internal management stayed. And that's the basic definition of a staple REIT, which means the manager is part and parcel of the REIT. So what happens there is that the management fees get captured within the company, don't leak out to a third party. So they do tend to improve their returns to shareholders in that respect.
I see. Okay.
So if you go to America, they will not touch externally managed REITs. They hate them. They're all internally managed.
I see.
Because they say there's more alignment between the management and the shareholders in that respect.
Okay.
And the Asian models are very much the Australian model, LPTs with external management. Although that's changing now. More people are moving towards this model. Japan there's no trust structure in Japan, so they had to go for corporate REITs. If the Philippines have done it, they'll go to do corporate REITs because they have no trust structure in their countries. It take too long to set it up. Those Commonwealth countries with trust structures put this thing into place because we had a trustee that held the assets on behalf of the unit holders and an independent manager to run it.
I see. It's very similar to that of a unit trust structure in a way because you have the
in
trustee
a way. And so we had trouble when we first started. To tell you another story about how we actually managed to sell this thing was when I went to talk to 1,000 people in Sunway Convention Center. The big insurance boys all got together for a conference. They wanted to learn about REITs. So I stood up there. We'd been just there for some time, okay, maybe a year or so. And I think Whitetail was also in play by then. They enlisted in that December of that year. And I asked everyone in the audience, how many of you are invested in REITs? 4 hands went up. We had no traction with the investing public. None.
Oh gosh.
They didn't know who we held, what the hell it was. And then we realized, hey guys, we got to do an education. We have to, go to educate the public. So all of us got together in the REIT market. There were about six managers at the time, or 7 managers who were actually listed. So we all got together. This was basically the precursor of the MRMA. We all decided to get together and do roadshows. So we'll all pile in and go to Johor. We get all the remisers there to invite all their clients into a big hall and do a presentation of all the different REITs. Almost like an investor roadshow. So we had all these things. We went to all these times. Ipoh, we went to TJ, went to Penang, wherever we could find a market. In fact, we also went to Sarawak to do this as well, in Kuching. But at the same time, we had a great fun partying after these events were over. And we got to know each other very, very well. So it was a wonderful social aspect to be part of this industry. And we got to meet everybody in the business, and we exchanged a lot of experiences, and we learned a lot from each other. Great fun. So it's been a fun
sounds like a Woodstock concert, Dr. Stewart.
Not quite.
It sounds, but anyway.
That's fun. It's like a convention. Every time it was a convention, we did that. But the bursar was very grateful because we're helping promote the asset class. And eventually, because in my slides, I will also explain to people we're not a unit trust. There's a big difference between us and unit trusts. We give dividends and we give money to you, 4 times a year. Unit trusts give you nothing. They give you units at the end of it, which you can't cash in. So unless you sell the stock, you can't get your money. So it basically gives you a chance to earn a lot out of the product.
Yeah, great. I wholeheartedly agree with what you say, because the other thing is the tangibility of the assets that you hold. I mean, when I first started investing, that was what allured me to REITs.
Yeah.
And that's how I stumbled upon you, and you were going on this. How would I say? This baptism of trying to.
Yeah, it was the hardest thing was getting the message across. But now I think you find that even in Access in 1 year, we had to keep at least 1,000 shareholders on our books, and because we had such a few sort of public shareholding inside our books, we had to get our staff to buy 100 units each to get the register up to 1,000. We gave them the 100 units, said, please go register as a shareholder. Because they cost us much. It was about $120 each. So
Yeah.
part of their bonus was free shares in Access. So we registered shareholders. But now they have got 9,000. And it's really grown. The mom and pops have piled into the asset class quite considerably. And it's giving better price discovery, if you know what I mean, to the stock. People sort of put their money where they feel it's safest. I think now a lot of people take it as a defensive stock. And I think they like the characteristics of capital gain and cash.
That's right. That's
regular
right.
cash.
That's right. A regular payout. It's like I'm getting especially for retirees, I'm getting my salary every 3 months or something.
Exactly. You get a check in the mail. So and you can almost predict what it's going to be.
Yeah.
And you know what you're going to be getting. And it's taxed only 10%. So it does really work in that respect. Better than FDs. Much better than FDs.
Great. So I'm gonna go to Mr. Ma right now.
Okay.
When you started Mr. Ma, was there a lot of resistance when you? I'm guessing you pioneered the idea, started the initiative. Were the REIT managers or these individual REIT managers, were they very hesitant or very supportive of that in the beginning?
Well, they were, because they all were having individual problems trying to get things across with the SC. The SC would not entertain a lot of their inquiries. They were forcing us really to do this, but in a very subtle way. And they were right, because, industry speaks with one voice. It's far more powerful. Because, if they entertain one, they entertain another. So it becomes picking and choosing. They would not take sides. So if someone got an advantage, then we had a problem. And then moving on from there. So part and parcel of it, the industry had some basic issues, especially with managing the assets. They had this crazy rule, still exists, and probably I'll get murdered by the real estate industry for saying this, but I don't care. The fact is that, you need to have a registered valuer to manage your assets, and you have to engage them independently to do this for you. Now, all of us have been managing our own assets very successfully, and we ran them for a while. But then the ruling came is you need a registered valuer to be registered as the manager of your assets. And the funny part about this is that a valuer, a two-man valuation company from Ipoh, is qualified to run KLCC. And that is the basic nonsense. Excuse me. I've got to shut this door. My dogs are going crazy.
Okay, no worries.
You'll have to edit that out, I guess.
No worries. No, I think the dogs are pretty humorous. Getting your attention.
No, but that was one of the big bones of contention we had, because it didn't make any sense to any of us. It was basically a rule that started off with the condominium industry. They're forcing them, they must have professional management in condominiums, because otherwise the joint management corporations didn't know nuts about running buildings. So they had to get a professional to run it. It's fair enough, fair call. But when you apply it to big, complex things like shopping malls, where the management who runs it needs to do all the necessary things about promotions and everything else, it doesn't work.
Yeah.
But they still have it today. So what they have is basically a convenience. They employ the valuer, they pay him his fees, stay away. I'll do it myself. And it goes on. So there's not much engagement from that respect. So I think a lot of times we find that, we're trying to get that lifted. That's been one of the main bones of contention with the MRMA. We've been fighting hard with the Ministry of Finance to raise this. But the Ministry of Finance runs the valuations, the Board of Value. And they're basically a gazetted law. So we can't change it unless we are granted an exemption, which they can grant. And don't forget, the exemptions are quite clever. Okay? Hospitals can do it. And when they had a palm oil estate REIT, remember, they had Bowstead Plantations as a REIT, they could manage it themselves. If they managed a hospital and people died, they would get their asses sued, okay?
Yep. That's right.
So, no, this is a bit too difficult for me to manage. So, okay, exemption given. So it was very, very, pick and choose.
I see.
Because there was really no level playing field in the way they made decisions. I think it's not really good for the industry. So we're still working on it. It's a work in progress.
I see.
But we mentioned a lot of other things. I mean, the SC and Bursa Malaysia have been wonderfully supportive. They're very engaged with us. We have sessions with them regularly. And for instance, when the pandemic hit and malls were forced to shut, we noticed that a few of our members gearing levels were quite high, to very close to the 50% level.
Okay.
He wrote into the SC and says, can you give us a 2-year moratorium allowing us to lift the debt levels to 60% if they cross over 50? Because if they cross over 50, they're forced to fire sale their assets.
I
to bring the
see.
debt
Oh
down.
gosh.
So to prevent that, they very quickly responded with a change in the rules. And I give them credit for that. These things you don't really hear in the market. These are the quiet changes that go on behind the scenes. Yes, very, very important.
Oh, that was great insight. I mean, I didn't even thought about that. I was thinking, oh yeah, it's almost like a margin call, right, Dato? Because it's like the moment you pop. Yeah.
You go over
Yeah.
you're basically margin call. So we tried to avoid that. And a lot of the REITs were very grateful that they had that breathing space, so they can get their portfolios together, really, so to speak, and move on from that. But the MRMA is thriving. And recently, we had a meeting together with the pandemic, and we managed to raise some money from some of our events.
Okay.
We all decided to put $100,000 aside to support the White Flag campaign.
Great.
So we picked 10 aduns, and he gave them each $10,000 worth of Speed Mart 99 coupons to go and distribute amongst their constituents, the ones who are poor, that have difficulty paying for their food and stuff. So obviously, things that we do in CSR, we don't make a big deal about it, but
Yeah.
we're happy to sort of help out.
Great. MJ?
Yeah, I'm just curious. You mentioned a few members in the association, but was Axis REIT one of them? I'm just curious. And if not, why didn't it fall into the same kind of pressures during COVID?
Which one? I mean, the performance.
Yes. Like, not like, were they one of them who you had to, because you had to write to SC to shift the rules, because some of them.
No. It was basically we have basically a regulatory committee in the MRMA. We have a very good team of people there. It wasn't for Access, didn't need it. They're 34% gearing. They're completely very, very conservative gearing. But some of the REITs were running very close to the 50% level. And when we saw that happening, we thought we had better do something to avoid a little bit of a catastrophe. So we appealed, and they responded immediately by granting us this extension.
Right. Okay.
But nothing I do is really because I wasn't in Access when it happened anyway. Okay, so, and besides the whole company, I still got a lot of affection for the company, and I still keep in touch with everybody. But I would say that you never spend more than 10 years running a company. You get moss growing underneath you. And what you must try and avoid is tired ideas. Okay, or get defensive about keeping business as usual. It's very bad mantra.
Yeah.
When I was in Access, we had a rule. Every year we had to do something new. Whether it was bringing in sukuks, extending our sukuk levels, trying out new ways of marketing. We had something to keep the business engaged with the markets. And we loved doing strange and wonderful things. It kept the members of the team very, very engaged. So I call it business as usual.
Yeah. I mean, when I first heard about, it's great that you brought this up, because it's a good pivot to one of the questions I wanted to ask about your statement. I think it was on BFM in 20, I can't recall the exact year, but you spoke something about how logistics of the future is going to happen, or the trend going forward. Because I think at that point of time, e-commerce isn't as, I think that was prior to Lazada, Shopee. I think it was just the beginning, on the nascent stage of Lazada and e-commerce. And you said that the problem with Malaysian real estate space, especially in logistics and e-commerce, is that there's no proper industrialized warehousing. And you advocated for a change in which how these smaller warehouses were built inside the inner city areas, or what we call central business districts, rather than having a huge warehouse for the outside and then smaller distribution points within the city. Has that panned out according to
Not yet, but it's coming. I'll tell you what's driving it. ESG. People don't realize it, but ESG is becoming a very important part of business decisions and attracting investors.
Yeah.
So we were talking to banks recently about ESG. Yes, banks are not linking ESG to loans as well.
Oh.
So we all better behave ourselves. So I'm looking to see whether we can get the banking industry to say, okay, if I build a a building that's green building, with good LEED certification, whether they can get better financing terms. I mean, someone's got to make the move to make it more attractive, right? So it's coming. And I think also the fact that, many of the portfolios that in the REITs, they'll say there's a change coming. A lot of portfolios in the REITs today are aging a little bit. And when you say aging, it means that the ESG profiles aren't really, the carbon footprints aren't the greatest. There'll have to be a lot of investments done to really upgrade them to a much more efficient way of actually air conditioning them or dealing with them. Warehouses are great because you don't have to do anything with them. You put some solar panels on the roof, you give them some water recirculation, increase the insulation on the roof, put some high efficiency air conditioners in, LED lights, bingo, you're green. Okay. Offices, my gosh, that's a nightmarish scenario, especially if it's old. I can retrofit a factory to be green in very record time, but otherwise it's difficult. So you find that, with the whole ESG thing, people don't realize, the environment, the social aspects, and the governance aspects of any business are becoming the center stage issues for investors now. And this is why I'm saying everyone's got to wake up and smell the roses, because it's coming and it's going to hit us harder than we think, and we must be prepared for it.
But what choices do they have, especially like office buildings? Is it cheaper to retrofit, or do they really just have to, if they really want to get green certification, ESG rating for their loans, they have to kind of semi-demolish the building and build it from the ground up?
I don't think the REITs have to do that, but I think they should take moves to making their carbon footprint smaller. And I think that means investing in more efficient air conditioning systems, which can be done. And, having more efficient lift systems, clever lift systems that automatically pick floors and not them running up and down all the time. There's such good technology out there with building management systems that we can do things very differently. We do have, I'm currently on the board of UA Magenta, and they have a property division that's really pioneering very high-tech solutions for the business districts and building owners. And this is something that was slow to get traction initially, but guess what? It's becoming mainstream now.
Great. That's a good segue into why you as well. Why do you lead? In a way, when you started up Alpha REITs and being the chairman today, right? Was that somewhat to fulfill your vision of still being in industry, but at the same time still trying to ride out or trying to enjoy the ride of this trend or changes? Or what's your vision for being in Alpha REIT actually?
Business unusual.
I like that. I'm gonna patent it. Yeah.
I've always taken a contrarian view in life. Okay, so when we look at the standard asset classes out there, okay, education is not unusual as an asset class. It exists a lot. It's very popular as student accommodation. It's very prized assets because you get very long whales with students staying there for long periods of time, and there's always demand. So that's been popular. But schools per se starting to emerge. But I'll tell you, from a real estate perspective, I was sharing this with some friends of mine the other day. You think about it. Which office building over 120 years old today exists in Malaysia? Which school 120 years old exists today in Malaysia?
My school.
Thank you.
Yeah,
a lot of
your
them
school too.
ACS Klang, St. John's Institution, LaSalle, all of them have been around for ages, and their buildings are still there.
Oh, yes.
So when you talk about real estate with legs, schools have it. Okay.
Yeah. So
they'll never go out of style because education is, such an important component of our civilization. And don't forget, when you talk about schools, you engage with it from the time you're 5 years old. From the first time you go to school, okay, when you finish school, you graduate, you go to university, okay, then you graduate, you get married, you have kids. Guess what happens? You take them to school again.
Oh, yeah.
And the whole cycle starts all over again, and then off you go. And then they're going to get married, have kids, and guess what? Grandpa's going to do some work. So until you drop dead, you engage with schools. So I never knew a real estate class that can actually have that kind of engagement, which is something that's so unusual.
Yeah. But I mean, okay, great that you brought this up because I've got questions. I know MJ went to a government school. So both of us went to a LaSalle school. The LaSalle schools have this, how do I say this aura of very old architecture. But
Yeah.
when you see new schools today, like the Taylors, the ISKLs, or the Garden schools, right? I mean, schools that can afford, to prop up their property. You don't see that kind of timeless design. Is that something that you feel is important? As you know,
No, I think people change according to the times. Building architecture changes. It's never static. You can't go back and build something that's designed 100 years ago. Never get traction. It'd be too expensive anyway because they're built in very, very, very solid back then. But I think at the end of the day, those schools actually have historical value, but they have immense emotional attachment.
Yes.
Everybody, So if you want to get into a school, an education REIT, you're buying into your history, running a part of history. Okay. If I can lay my hands on those mission schools, I'd do it in a heartbeat. Because the locations in KL are prime. Look at St. John's, heart of KL, MBS, right next to the Merdeka Tower. Okay, they've all got terrific locations and they're wonderful bits of real estate. The one piece of real estate that was actually eventually sold is converted into pavilion.
Yeah, that's right.
BBGS.
Yes.
So, all those buildings had a lot of history and the alma maters are very, very important people.
The who's who of Malaysia.
Who's who of Malaysia. So, so I look at the asset class is very interesting, but acquiring assets is not that easy because schools have a different dynamic and a different sort of balance sheet. So we have to be very careful who we actually bring on board. They must be, with good growth trajectories and ability to grow their business and expand. So what happens is when they sell you the school, they immediately take the money and build another one. And hopefully they'll sell that to me as well, and then go build another one. So it has a multiplier effect, and hopefully we can build out a good portfolio. But it's being the education business and being today where we are, we have to start thinking a little bit more globally. Because education is not just a Malaysian game. I'd love to get some Australian assets on board because people go there all the time. UK assets on board. They're all great institutions, So I think they all have tremendous possibilities to bring into a global portfolio of really, really good schools. That's the vision. Okay.
Great.
So
I mean,
I hope I can get there in time.
When you first broached the idea with me, this is probably the third or fourth time I've heard it, and I still love it. MJ and I have listened to you preach about this school before, and the number that you gave us actually floored me, to be honest. MJ, I don't know if you still remember the number. One school, how much is testing your memory, MJ? Dato Stewart said this before.
Oh no.
It's testing my memory too, John.
You were asking me, Dato, about ISKL and roughly how much will a school actually cost, the development GDV. And I was like,
it's very expensive. They spend a lot of money.
It's about 460 to 480 million, if memory serves me correctly.
Something like that. You don't quote me, but I believe that was a number that was being tossed around.
Yeah. So it's quite insane to build a school, MJ. Yeah. So I'm gonna segue into qualities of REIT managers. And I mean, you already gave us a precursor at the beginning of the podcast. REIT managers are one that are very difficult to find. So what makes a good manager, and how can we as investors actually tell, or what are hints to know whether this manager is good?
I'll tell you what, when we had our road shows, seriously, and we had foreign companies, in fact, a lot of foreign companies bought into Access. So they came to see us and they said, I don't look at your share price. I don't care what your assets are. I want to meet you. They invest on the strength of the manager, not the portfolio. Because if a good manager is there, they know the portfolio will succeed. Okay. So the duty of managers really is to grow their business. That's the primary, and grow it with good assets. Okay. It's not so much earning a commission when you do a purchase, but making sure you get the right purchase. And you get a purchase that, whenever I bought an asset, I said, now if the tenant moves out, who can I rent it to next? So you need to have that view in mind that where we're putting into a building has got to be replaceable with someone equally good. So wherever you buy your assets, locations are very, very important. You don't go and buy a factory in the middle of nowhere and hope it's going to work for you, because if the person moves out, it'll be very hard for us to find someone to move back in again. So you got to really cluster your decisions around very busy places with good access, good roadworks and things like that from an industrial perspective. And you need to be able to have buildings that can, don't forget, industrial buildings don't last forever. So you look at what's around it, and if the town's slowly creeping at it, you know that within 20 years or 30 years' time, when you want to do something or sell it off as a commercial property, you can exit and find something else to build somewhere else.
I see.
But you can't do that when your property portfolios are large. When our portfolio in Axis reached a certain size, we made a policy of buying 4 and selling 1 every year. Okay, so you get 3 in, you get 1 out. And the ones were basically what we call culling the herd. Okay, the ones we sold were the ones that mature, very little growth upside, no point hanging on to it. So we sold them. At the time, they had quite a big capital gain on them. So we took the policy of returning the entire capital gain back to shareholders. So when we did that, there's a certain amount of turbocharging we can do with the dividends. And that's good capital management. So we kept the capital we invested initially, but gave all the upside back to the shareholders. They loved it, which is fair. So we shouldn't keep it ourselves and say, I need to invest. No, you do your own investments through gearing and other means. You do placements and you get the business going. But whenever there's a time to reward your investors, you do reward them. And that kind of philosophy is a good practice for managers to actually follow. I think it does help promote the stock to a large extent.
How do we find out? I mean, like retail investors, I mean, institutional guys, they come in, they give you a phone call, Dato Stewart, can I meet you for coffee, get a tour, like what Ascender's REIT actually, the mentors that you said extended you though. But for retail investors, how would they be able to gauge from either, is it through an annual report, is it through attending more AGMs, or is it through corporate actions that, what are the sources of information would you advise potential investor for REIT to gauge the quality of management?
Quality of management, quality of assets. Yeah. Have a driver and see what you're buying into. You don't buy a house without looking at it, right? You don't invest in a property portfolio without looking at what they have. I mean, no, you can't do all of them, but you can get a flavor of what the properties are like. If you go to a portfolio and suddenly you see this building falling to bits, think twice. Okay. And you can immediately say the manager's lousy and that's it. Don't bother. Okay. Yeah. Good managers keep their portfolios pristine because they know that's where the value is. Yes. They manage their capital, so they look at gearing levels as an example. Yeah. And the key for successful managers, the one ratio I always look at, NAV.
NAV. Okay.
Are you trading at a premium or a discount to NAV? I find those REITs that are trading at big discounts to NAV, it's very cheap real estate. Okay, you get more money if they close it and sold all the assets off. But I'm saying that they do get better dividends than normal REITs, but the total returns are nowhere near as good. So always look at total returns. Never look at dividends. Look at what your capital gain is over a year plus your dividends. So 2 components: your capital gain and your cash component. And cash components in REITs can be quite large, maybe 60-70% of your total returns. So you're getting money back every. At the same time, you're getting your share price moving up. What happens to the share price when you have better dividends? Okay, your share price moves up. So the other thing that's very important is what is the DPU track?
I see.
I sent you a slide. If you can show it, that shows one slide that has the comparison. You said about what happened to COVID, and this shows what happened to COVID over the last 1 year. It's just one slide. I don't really think you want to bore your viewers.
No worry. I see whether our videographer will be able to put it up. But
put it up
worst case,
we can come back and talk about it later. So I mean, that's the thing. I look at DPU, share price.
Okay.
If that's going forward, DPU is increasing every year, and your share price will definitely move every year. Okay. There's a natural, readjustment back. They're happy with the yield. The moment the yield starts going up, they bring it down by raising the share price.
I see.
So this is the normal leveling thing. And I think if you look at it's like a bipolar market. There's the smaller REITs that are struggling and the bigger REITs that are doing very well.
Yes, that's right.
So, and they all trade at a premium, the smaller ones trade at a discount. So to move from a discount to a premium level is very hard because when you're small, you're only allowed to place out 20% of your units to raise capital every year.
Okay? I see.
So it gives you a limit how much money you can raise every year and what you can buy. But if you're trading at 8% to the market, if you're doing, you have to give 8% dividends to the market, what can you buy? That'll be accretive, okay?
Yeah, that's right. That's right.
And you need desperately to get into the market to get more units in. So you have to place out to get more units in. And it happened to Ascendus during the financial crisis. They went out to do a placement in the middle of the crisis. They had to discount it by 40%.
Wow.
The placement just to get the money in. The share price never recovered for 4 years.
Wow.
But they got back there. Give them credit, okay? They got back. Yeah. I'm in fact an investor in that area myself. I love the stock. I think they're they're great company, but they're nothing. That time, there's so many debt instruments out there in the market that they couldn't actually control. They'd all been called in at the same time, so they do something. So, I mean, it's very important how you manage your debt, what kind of debt you have, short-term, long-term debt, bank loans. Look at the debt profile of the company. It's very important. You don't have companies that are too highly levered because they get into trouble. You need companies that have headroom to grow, which means that debt levels around 30% gives them a chance to go to 40, place out, bring it down to 30. That's what we access. We have this, we'll buy on debt and then we'll retire on placements.
I see.
So we have this.
That's a good strategy.
No, it made it very easy. We kept a portion of our debt in RCs, which we could retire. Okay. So we use RCs to buy, and we create units in the market to then settle the RCs later. We buy and then put more equity in the business. Buy, put more equity in the business.
Okay.
So when debt is low, and if your yields are if the market loves you and your yields are low, place more units out, because you always buy higher than your share price. Okay, your yields, and you always be accretive. And the trick is getting accretive investments. The accretive investments always get you better DPU.
Understand.
The math is perfectly clear. The more DPU, the more distributions, and the higher distributions are, the higher share price goes. And it's very easy to do that way. So it's a really interesting way of actually managing your capital. It's a very simple thing. We sort of cracked the code very early on. We did it every time we went to market. We do roadshows, because you see, when you do that, you don't have to give what they call a limited prospectus in the market.
Yeah, that's right.
I can't go to the market and say, I need placing out units because I want to buy this. No. I'm going to the market. I want to get your money to retire my debt. So there's no need for a prospectus. You could do a 2-day roadshow, get your commitments in, and move on. Because they all knew that waiting in the wings was 3 or 4 acquisitions lined up. And the money came in, we just went up, borrowed again, bought it, and then retired it again. So we could grow our portfolio quite quickly and still maintain the share price performance.
Understand. Yeah.
You
had a question?
Yeah, actually, it's more on the financing, right? So there are all sorts of financing options out there, especially for, when you're at Axis and you were a pioneer. So walk me through the process of, choosing your preferred source of financing. That's one. And the second question I have is, when you talk to banks to get loans, what are usually their biggest concerns in relation to REITs? Why would they give, for example, let's say, I'm not saying this is the case, but for example, why would they give, let's say, Axis REIT better terms than, for example, Mapletree, let's say?
I don't know what Mapletree gets. I can't say that. They probably get very good rates out of Singapore banks, better than we could do here. We lived in quite a high interest rate culture for a while. Okay, the interest rates are not that clever, but we found that doing sukuks, because we're Islamic. Another thing, we went Islamic. That was really a stroke of genius, really, because when you become Islamic, you get much better financing terms from the banks, and also the manager doesn't pay tax. So you get a tax holiday, which is great. So my shareholders and the manager were very pleased. But it was easy for industrials to go into Islamic. It's much more difficult for other businesses to do that because of the conflict with banking and insurances. I mean, you talk about an office building, no way. It's very tough to do that.
Right.
Unless your tenant is a Bank Islamic or something like that. So it's not that easy to do. So most things, like even shopping malls, very hard, because they have pubs, they got, they sell pork, they got all kinds of stuff in there that don't comply. And although the rules give you a 20% non-compliance limit, we always try and keep it down to about 5%.
I see.
But there always will be, like you buy a hypermarket, there'll always be the beer section, there'll always be the pork section, but they're very small in terms of footprint. So we're allowed to do that because it's not less than 5%, it's less than 5%, and it follows the rules. So it wasn't difficult to comply. Sorry, question again, MJ, what was that?
Yeah. No, I think that's...
Financing structures, right? Okay.
Yeah.
Okay. There's always 2 types of debt. We first went in to do the REIT with 100% RC. That was easy to do because they have tremendous asset cover. The banks are very happy to give us an RC, and the interest rates are much lower. Okay, so we can manage to get our accretiveness moving. So that was fine. And then later on, we tried the bank loans, hated it because they're term loans and they're very clunky, they're expensive. So we moved very solidly into doing 7-year sukuks.
I see.
And we got surprisingly good rates. And so we started with a $300 million sukuk program, and then we got it cranked up to $3 billion. Okay, so we can retire one sukuk and then claw into pay for that with the next sukuk. So they line them all up, okay, all the ducks in a row. So the financing was to roll over the sukuk, so it was very easy to manage. And of course, the trouble with sukuks, you have to pledge almost your entire portfolio. They only give you 50 cents on the dollar, okay, to get the AAA tranches. So you only take the AAA tranche, you don't take the balance. So you take the AAA tranche of the bonds, so you work for that basis. So we worked on sukuks and we worked on that. Later on, we approached to do perpetuals. Might have heard of, okay? I hate them.
Okay.
The merchant banker that came to give it to me, I threw him out of the office. Never give your unit holders a product they don't understand.
Yeah, but you see, it's coming into the trend, Dato. I mean, the first time I really read deeper into it was Top Glove giving perpetuals, and then I was like trying to figure out, okay, so when are they going to convert? And yeah.
Well, it never converts. You can keep it there forever, but every 5 years there's a 10% kicker. Okay, which is you can't argue. It's fixed. Yeah. So when you roll it over again, it cranks up. Okay. Yeah. And it really is debt disguised as equity. Yeah. It really is a little bit. I don't think we should actually try and hoodwink our unit holders into that feeling. Yeah. And don't forget, they get preference over unit holders.
Oh yeah, that's right. So that's more senior, right?
That to me was an absolute no-no. Unit holders have to be held supreme in terms of the creditworthiness and the ability to get the first crack at anything. If anything happens to the company, they get the first preference in any liquidation exercise. It doesn't go to a perpetual. So we kept it clean like that.
Yeah. Can I dial back a little bit? Because you said the first option was RCs, or revolving credits. How long was the normal tenure of these revolving credits that you guys were getting before? You said sukuk was about 7 years, but are the RCs back then, what were the tenures?
1 to 3 months. Normally 3-month turnarounds. We'll do a 3-month rollover.
Okay. Okay.
Primarily, if the banking sector is stable, you can do that.
I see.
If the banking sector goes down the toilet, they'll ask for their money back. But because you have such strong cover and such strong cash flows in the company, they feel very comfortable extending it to you and giving you a very, very good rate at the same time. So we talk about, I say my RCs were my perpetuals. They were there for the long term. We use them all the time. Even right up to today, I think Kit May is still using them as an important part of our capital management because they're so convenient. Okay, easy to raise. The fees attached to getting that debt's very cheap. Like a term loan. With all the crank, and just crazy. You just put some assets with them and say, okay, I want this against an RC, and they'll do it.
Understand. What were the interest rates like back then for RCs, if you don't mind educating us about the history?
Around
4%? Okay.
Yeah, it's around 4%, 4.5%.
And that time, interest rates on fixed deposits were. Maybe I'm making reference to the 90s, the period of the 90s. Was that the low?
It only started in 2005.
Okay. So
post AFC.
Okay, so that means probably about the highest you'll probably get about 5% interest rate. I'm guessing.
Around there. Loans are running about 5. Yeah.
Yeah.
Okay. The sukuk came in much lower, long term. People like the green paper attached to it, so it was fine. So we felt it gave us a much more stable. You see, you don't want to leave anything to chance in terms of when it comes to refinancing. There's always a big question: can I refinance or not? You don't, again, you have the same problem having sort of fire sale to meet your debt obligations. So caution.
Something on COVID now. I think you touched a little bit with regards to the gestures that you guys made. It's so ironic. This morning I was reading your profile on LinkedIn I got knows how many times. I chanced upon one of the posts that you liked on the Speedmart 99 founder, the 99 founder.
He lives in Klang. He's a Klang boy like me.
Yeah.
And he's also a handicapped guy. And he built this empire, which I've got to take my hat off to.
Oh yeah.
He's did an amazing job with his empire. And we support him because I think he was a Klang boy, but he's got so many outlets.
Oh yeah, exactly. The distribution point.
If you want to send help to any of these people, you got to send help in the form of cash vouchers, not cash vouchers, the vouchers for food.
Yeah.
But they can go just around the corner and get what they want.
Correct.
if you get something from like Tesco's, they got to travel all the way across town to get it. And
Yeah.
sometimes with the barriers and all that, they can't move. So Speedmart was the quickest way of getting help to them and not having to pack food parcels. Okay.
Oh yeah.
This way they had their dignity.
Yeah.
They got the coupons, they could buy what they want.
Yeah.
They were like a charity case, receiving food from other people. I think that's something we'll forget, you know, when people give things away, they like to have pictures of themselves taken with them giving the food away.
Yeah.
Okay. I feel sorry for the people receiving it, you know.
Exactly.
You know,
Exactly.
where is their sense of achievement, or probably just down already? They're getting, you know, having to take charity is not an easy thing to do.
Right.
So we try and keep it as quiet as possible and do our work in a quiet way.
Yeah. So that the dignity of the beneficiary is actually maintained, actually.
Yeah.
Yeah. So COVID-19, and I know this is a conundrum for especially retail malls.
Yeah.
How long do you think, I know it's a crystal ball to know how long do you think will last, but what are the other tricks up the manager's sleeve that they can pull out in order to benefit both parties? So there are things like reduction in rental rates, probably a moratorium of tenants paying. But what are your thoughts on not having the tenant to pay for a certain period? Do you think it's a bad thing, or do you think it's something that it's temporary, or what are your thoughts?
It's killing their DPU. I mean, REITs work on cash flow, okay? They work on getting their rents on time.
Yeah.
And if there's any disruption there, their performance suffers.
I see.
You can see the performance of some of the retail REITs. They really had a hard time with that.
Yeah.
You know, because most of their tenants are very short leases.
Mm.
Now, with industrials, you have 15-year leases. Market dies, doesn't die, they'll still pay. They're normally big companies that got balance sheets that can actually manage that. But the smaller retail boys, you know, their cash flow dries up within 2 months if they're not rolling it over.
Oh gosh.
Cash very quickly. So, and some of them actually, some of the retail malls, I think the problems they had was they wanted sort of a base fee and a turnover tax. There were no sales, there was no turnover tax, so the base fee meant their whole income dropped. I can't say who's having that problem. I have not researched it, but I think this is how the math works. That if you have a base fee and a turnover tax is not there, it reverses the base fee, which means your income drops. And you can always tell by the distributions from the REITs. I track them quite closely. I watch how the distributors are going. But give them credit, people are staying with them. The investors aren't throwing the stock. They're staying with them. They've softened, the prices have softened. They say it's a good entry point for people wanting to move in. I mean, put it this way. You can't duplicate another pavilion. And it's there to stay long term. It's like a school. Okay? It was a school. But it has legs, and it's a wonderful development. It's iconic, irreplaceable. It's like Mid-Valley. They'll never be able to build another Mid-Valley in KL or another pavilion. There's no land or desire. So you'll see that the investors have stayed with them. And I think the turnaround will come probably somewhere in November, December, in time for the Chinese New Year or maybe the New Year's rush. I think everybody's tired. They're dying to get back to spending money.
Yeah.
They still got it. And you'll find there's a big spike moment. I think the vaccination rates are picking up quite well.
That's right.
And once we hit herd immunity around November, things will start to open up. They're really starting to open up now. And I think people are getting of a view that we have to live with this thing.
Yeah.
We get it, we get it. We don't get it, we don't get it. Okay. So if you get it, hope you don't die. That's all. It's like Russian roulette. Some people get it badly, some people don't. So there's going to be cases where it's going to spread. But I think people who are smart would have got vaccinated. But I think people are going to say, if you're vaccinated, come. If you're not vaccinated, stay away for your own safety. Yeah. Okay. So I think that's going to be the rule. Even with schools, students who actually been vaccinated will be allowed back into school. Yeah. So they're going to have this underlying rule that the vaccination rate is going to be the pre-qualification for entry into any shopping mall or things like that. But that will mean that things can come up. Don't forget, the vendors in the malls themselves have also done a pivot into e-commerce. What they can't sell themselves, they've gone, into selling.
Yeah.
I used to get a lot of my stuff from the supermarket before. I can now buy online.
Everything.
But I go back to them. But I go back to them again. It's not the question. Okay.
That's right. Great. I think if I were to extract a salient point from it, I think the best way is really just opening out of sectors rather than trying to reduce rental rates, getting a moratorium. I think the only the best solution actually is really opening up of the sectors, I guess.
It's just kicking the can down the road by doing that, because it doesn't help anybody economically.
Exactly.
The pain is there all the time. So getting people back to work is important. Getting jobs opening. I'm just worried that, at the end of the day, when they say, okay, all open up, no one opens up. They've all gone bust.
Yeah.
So all these shops will never open again. And all the high street that we're used to will not exist anymore. So it'll be interesting to see what happens in the long term. But don't forget, this is also played into the hands of the e-commerce industry in a big way.
Yes.
The industrial REITs have done very well. The industry itself has done very well. I mean, 37% growth last year, unheard of. I think all these e-commerce companies have posted record growth, and they're piling in, and they're getting better at what they do. So it's interesting to watch people's. Put it this way: sometimes I get so fed up I can't find stuff. I have to go and order it online.
Okay.
Try a couple of places I can't find. Oh, to hell with this. Let me go and see if it's on. Yes, it's there, and I can buy it. Sometimes not the best packaging when it arrives. They got to get that act together. Sometimes it's disgusting. But you have to live with it.
Correct. What do you think are things that should improve in the Malaysian REIT sector? Either the managers, the quality of the assets. What do you think is gnawing at you that if you were back at Mr. Ma being the chairman, what would you advocate your members to do?
Go forth and multiply. Get out of Malaysia. Go find some other assets to build and grow your fund. We're not just a Malaysian fund. All funds can be global. We got to get our mindset out of being, a kampong REIT into a global REIT, because Whitetail's doing it.
Yeah.
I think KPG have put their toe in the water and gone offshore. It can be done, and you might be able to find good assets to buy and inject, and you'll be applauded for it. There's risk obviously attached to it, but good managers manage that risk for you. That's what they're paid to do.
Understand.
And they really earn their stripes by doing that.
And
grow the assets out. We need REITs of $10 to $20 billion in size to really get the world's attention. At the moment, most of the foreign investors have left.
I see.
Can't seem to track them back again because the growth rates have been extremely slow and sluggish. Mm-hmm. We're not growing quickly enough. Okay, we're not buying portfolios. We're buying individual products. The way the global boys go and do, they'll buy a portfolio of assets from somebody and bring it to the REIT. So Blackstone and BlackRock and all these guys go.
Yeah. BlackRock is insane. Look at the size of the portfolio, man.
Or they create platforms, okay? They create fund platforms. You look at the Goodman Group, which is interesting because they're 36 billion Aussie dollars in size. They started off as a small REIT, and they set a platform up. They started doing development. Yeah. So the thing is that we tried to expand out of this as well. This is why I moved out of Access to start a fund platform that'll attract capital, and we can do bigger stuff and create products. Mm-hmm. Create a lot of products for the REITs that will really make a lot of sense. Okay. Because the new products now are big in value. A new warehouse, big one today, $400 million, $300 million. The big ticket items. You can grow a REIT very quickly if you have the ability to build and inject these kind of assets into your portfolio.
I see.
And we need people to get into that mindset of becoming more adventurous. The stakeholders of the REIT manager are property developers. They should be looking at setting up funds that can attract capital. They can't do it by themselves. No one's balance sheet's that strong. They can go and develop, but they can attract capital in to build out their land banks. As opposed to crawling along, building it slowly, they could accelerate the process to attract global capital, then become a little bit of a global player.
I see.
We become more important as a place to come. And of course, we have this enormous potential with our ports, okay? And the ECRL coming across is going to link Kuantan to Port Klang. We've actually produced a paper on this internally with our own research. Interesting reading, because when that happens, Kuantan to Port Klang by rail cuts 3 days shipping out of sending it through Singapore.
Wow.
That could be a game changer. It will take time, but it means ships can come in from Shanghai, park at Kuantan, bus it over to Port Klang and shoot it off. These are things that can happen. So there's a lot of potential for the country. We get the best infrastructure outside of Singapore by far. Power, water, telecoms, you name it. We have it all there. We've just not been able to pull the threads together to make it work. The biggest mistake we've ever done, we took the eye off the ball with industrial development. And uninteresting. Everyone wanted to go and do merchant banking, or the services became more important than the industrial component of our economy.
Understand.
But by and large, we should have been looking at moving our economy, industrial economy, into a higher level of technology. But again, the big mistake we made was bringing foreign workers in, low pay, depressed the entire wage structure in the country. And this is why today you have 40% of the country in B40 status.
Yes.
I'm sorry, it's just gone to 50% with the pandemic. That's the stats.
Yeah.
Another 48% of the M40s have now entered the B40 category. And gross GDP is dropping.
Yeah, it's sad, but it's the reality of what's on the ground, boots on the ground today. And I'm very aligned with you, Dato. I mean, even with our research group, we have a stocks research group, and we were just discussing yesterday about how engineers, fresh graduates as engineers, civil engineers, whatever engineering major that you have, are seeing not many employers willing to train them up and paying them better. There's not many employers. I think there was a statistic that came out yesterday. Less than 2% of employers were willing to pay more than 3,000 for an engineer. So
I'll tell you a story about my engineering journey, okay?
Oh, please.
When I came back from university in 1974, so the whole man, my first job paid me $1,200 a month. That's 1974.
Yeah.
Okay. That was probably in today's money worth $12,000.
Oh, yeah.
Okay. I could buy a house in SS2 for $24,000, which was 2 years' salary. That's why it worked back then.
Yes.
Now the same engineer comes back, he gets $3,000 a month if he's lucky, and the house has gone $800,000.
All right.
Yeah, kiss that goodbye, right?
Yeah.
So there's something intrinsically wrong in the way we should actually employ people. And see, the thing is that, we don't like training people.
Correct. Why?
And they won't pay for fully trained people, they're too expensive. So they end up with mediocre, and we can't move the needle. So, and in fact, the funny thing is that, people that come out of technical training, the vocational schools,
Yes.
starting pay is $4,000.
Yeah, that's right.
They get jobs immediately with the engineering companies who bring them on board to run their CNC machines and stuff like that. They have the technology and the ability to do it. Straight out of the box, they go straight to the machine and run it.
Yeah.
We don't have that ability. Engineers, should be paid much better. That's my view. As a profession, they're dumbed down very badly.
Yeah.
So you don't find many engineers. The ones that stick to it eventually do get paid. I employ engineers who earn a lot more than that, and I pay them well, and we get a lot out of them as well.
Great.
Especially the civil engineers working on our projects. We do try and attract the best talent.
Great.
I believe that you should never pay people peanuts.
Yeah, because
They're a bunch of
you pay
monkeys.
peanuts, you get monkeys. So, let's segue a little bit. MJ, if you have any questions?
No. I'm just enjoying myself listening.
Yeah.
Talking about monkeys, 1 hour.
Just segue a little bit into I, as an outsider, I really admire you as a REIT manager. But in your case, are there any REIT managers that you kind of think they are really at their game? I know you've mentioned a lot of your peers, probably I'll name some, Dato Jeffrey of Sunway. Anyone else that you think that, are worth mentions?
I think Philip does a very good job in Pavilion. He's got a good grip in the business. We'll say that.
Maybe globally even, any REIT manager they've kind of, sorry?
The CEO at the time of Ascendus, Tan Sepeng.
Okay.
Great admiration for him. Lovely man, very clever, very good leader for his company. Did a lot of very interesting things. He taught me about outsourcing. Don't have a big staff. Okay, you get to enjoy the management fee even more. So no, he did a very good job. He grew Ascendus at the most phenomenal rate. Mind you, a very good captain with him, and that was Phil Pierce, who now is very sought after. He's with ESR. ESR is growing by leaps and bounds.
Yeah.
They just announced their takeover of the ARA Group, making them the third largest real estate company in the world.
Wow.
ARA owns Logos, so it's becoming a real monster. And Mike De Jong, the managing director for Asia, sent me, because I know him very well from he sent me a text saying, well, we just closed a $4 billion fund for China. US. Why can't we think like that? John, what's wrong with us?
Yeah. We should do better.
Small ambitions get small results, you know? I
Yeah.
always say that. We got to think a lot bigger than what we're capable of right now. We're
Yes.
scared of success.
Yeah.
Scared of taking risk. I don't know what it is, you know. We don't seem to think big. Small is okay.
We need giants like you to kick our butts, you know, Dato Stewart. Serious. I'm not kidding you. kick harder, you know.
I think that we all need to realize that we all have tremendous potential. I have great admiration for a lot of the Malaysians who work in this country. It's smart. Singapore loves us. They pay us a lot more to move there.
Yeah,
We
exactly.
don't seem to get traction in our own home ground. You know, it's been a horrible return. But I will say, you know, in the tech side, I see a lot of very interesting things happening.
Oh, yes.
We're creating a brand new class of entrepreneurs. And a lot of young people are going back to farming, which is unusual. And believe me, when they go to farming, it'll be a very different kind of farming. I mean, these kids are very tech savvy and they can really transform that industry from backward industry to something really modern and vibrant. Because, you know, I was sitting on an education conference on Friday, sponsored by Iskander Group. And I was telling them, you know, the trouble with kids today is that they carry around with them the most powerful tool ever invented, the hand phone. It's the most powerful computer that anyone can ever own, okay? The whole world's in their hands and they never use it. Social media.
Yes.
That's all it's used for.
Yeah.
The amount of information that's contained in that device is just unbelievable, mind-boggling. I never had that kind of access to it growing up, or even in university. Don't forget, in university, I used a slide rule, no calculator, okay? And the nearest computer we had was occupying 2 floors of a building and had all the power of a Pentium 386, something like that.
Yeah.
Took us forever to get results out of it. But, you know, things change and things are moving forward. And the technological pace is getting frantic and we can't keep up with it. But this is where the opportunities lie, you know, in the tech sector, for sure. And the new kind of jobs that are coming out of it. We all tend to think in very traditional terms, huh?
It's a brave new world. I mean, I have a daughter. She's 12. She has a YouTube channel, and you know, you can't, you know, back then, I if you tell your parents about, you know, this new venture,
I'm going to the movies, okay?
Yeah, it's like, right.
So yes, the EBGBs out of parents when kids say I want to go into movies, you know, it's not a proper job.
Yeah, exactly.
What is a proper job anymore? You know, internet's given a lot of capabilities to a lot of people, and the tools available are just amazing.
Right.
That we can be so inventive and creative with.
Yeah, great. What would be your wish list for the Malaysian REIT sector? I know go forth and multiply, but how? Okay, maybe put it in this angle, Dato. What would encourage? What's your pitch to young people to enter this industry to help it go forth and multiply?
Well, first you got to get in the manager's position first. You know, that's the way you make change. Change always happens at the top. They make all the big decisions. But if you know, it basically is an entry to the capital markets for them, and the kind of experience you get. One little other story I didn't really tell you is that in the middle of all my Axis years, we tried to do something really, really bold. When I talk about business unusual, we attempted to launch a global REIT in Malaysia. It's never been done before. Okay. I'm like the Don Quixote of the world. I'd like try tipping at windmills, but we nearly pulled it off. Okay. It was a $1 billion portfolio.
Wow.
We listed on the KLSE as an Islamic REIT. Okay. We had already done the roadshows. We had about nearly 50% take up before we went to market. One half of our portfolio was in Japan. About another big chunk was in Australia and a few assets in Hong Kong.
Okay.
1 week before we went to market, the tsunami hit Japan. And Fukushima was a blow. We had to pull it.
Oh man, all that effort.
That was heartbroken. But guess what? You know, we saw the best of the world. You know, we did roadshows in Saudi, in UK, all over, because everyone's interested in the Islamic component. So all the Islamic countries were really champing at the bit, really keen to take a chunk of this asset class. So we thought we were on a roll. It was called the AGIR, Axis Global Industrial REIT. It was an Islamic REIT, I can't remember which it was, but I think it was Islamic REIT. So AGIR came to an end when Fukushima nearly blew, or did blow, and gave everyone a chance to scramble. I was actually at Sendai 2 months before the earthquake.
Wow.
Looking at assets. So I mean,
do you still have the prospectus? I would love to have a read. I know it's COVID.
I think I can dig it up for you, John. I can read. Yeah, sure. Why not?
Yeah. I would love to have a read. I mean, this is something. Even though it remained at ideation stage, and I wouldn't say
this is
to
market.
Yeah, it's close to market, right?
So just around the corner.
Yeah,
we had everything lined up. Finance, everything was all figured out. And we learned so much about doing cross-border deals because we learned about Japan's crazy structures you have to go into. TK, TMKs, and all these funny things. You have to go back to school to learn how you used to structure financing deals or even ownership deals, how you do bonds and stuff in Japan. And Australia itself is another market on its own.
Mm-hmm.
What spawned out of this that we did when we post this event, we actually, some of the assets became available, okay? And we persuaded Rajesh, myself, my partner, myself, persuaded the EPF group to go and take the portfolio on with Goodman, which they did. And then consequently bought another portfolio in Europe, about nearly $2 billion worth. And they've done very well out of it.
Yeah, I would love to read the prospectus.
But it was an interesting adventure. See, the thing is that if you don't make business an adventure, you can't sit at your desk every day the same thing. It drives you nuts.
Wow. Golden words.
No, you have to get off your butt and do something. Otherwise, if you don't think what's around the corner, you'll never be able to capture it. And your competitors nowadays will just overtake you, left, right, and center. But for the REIT market, my wish is that, as I said before, go forth and multiply. Look at better ways of funding your acquisitions. Sell off your assets, buy some new ones. Nothing's forever. We have too much of a philosophy here, sentimental value. I said, to hell with sentimental value. It's just a building. Get rid of it. Buy something that gives you more upside than the old one does. Because some of them reach their end of life.
Yeah.
And they must be trashed. Or you sell it off and take the money and do something else with it. There's so much more opportunity. Opportunity is adding on to the old opportunity. That opportunity means divesting of old opportunities and bringing in new ones. Mm-hmm. You can't build on an old portfolio. You can definitely regenerate it.
Great. At this point, I want to talk about Kiwanis a little bit later,
okay.
Right? But before that, I actually wanted to share a story. So, as you can clearly see, Dato Stewart is a very articulate man, and I just wanted to share this story, my very personal story with Dato Stewart. So, I invited him over to speak to a group of people about REITs. He kindly obliged. And in return, he asked whether I could speak on his behalf. And within a heartbeat, I said yes. And the crux of the story was not so much about the talk, but how he actually sent over this photo over here, right? So I don't know you guys can see it on YouTube, but it was just an appreciation note. And this guy's busy. He drove all the way to my office, unannounced. Just said, "Hey, John, I'm here at the office," and I was like, "Wow!" That cemented. It says this is how a gentleman should actually treat people, and it was an honor for me to actually get this. And
it was our pleasure, John. It was a great talk. We really enjoyed your. I just wanted to share your experience with other members in the club.
Right.
But having said that, yes, Kiwanis is another part of my life.
Yeah. The best part is you got my surname wrong, and I didn't have the heart to tell you on the plane.
I have a very difficult name. Is it How Can or Who Can?
Yeah, that's right. Yeah. So let's talk about Kiwanis now. But I really wanted to share that story because how I wish more people were like that in the world, right, Dato? So what made you go into Kiwanis? What was it that what were the objectives or certain things about Kiwanis that attracted your philanthropic effort towards that?
It didn't start with Kiwanis per se. It started out much earlier than that. My entry into community service started in 1979 when I joined the Apex Club, which was an Australian branch of the Apex Clubs in Australia.
Yeah,
and we had a club in Klang, and there's some members there. They wanted to do great stuff. So we did, we had a great journey together and got really interested. But that club had to retire me at 40. So when I turned 40, I had to leave. It was Young Men's Service Club.
I see.
So when I finished that, I said, what am I going to do with myself? So Kiwanis had just come to Malaysia wasn't very big at the time. They had probably 200-300 members. And so I joined the Clang Club at the time. My late wife, was teaching. And so I asked her, would you like to help me set up a Down syndrome center in Klang? And she was tired of teaching primary school, kindergarten. So she said, yes, we'd like to give it a crack. And she did a phenomenal job building it up. And so we started from those rather humble beginnings with 5 kids in one small building. We got 60 kids now. And the club owns its own building right now for housing these kids. But that aside, I think, community service is something that was brought up with my parents. My mother was very much into public service. She served on school boards. She started the family planning movement in Selangor. Did a lot of work on the estates, especially with, talk about ESG. She used to go and berate all these estate managers. At the time, they were all Englishmen. Okay, you get them to provide the workers with proper accommodation, diets, education on basically on family planning, and gave them land to cultivate food on and things like that. So she was very fond of her. We used to call her Periyamma, in India. My mum was strange because she grew up on an estate, and she, from a young age, her best friend was the cook's son, who was Tamil. And so she found out that she could speak. She picked it up and didn't realize she was good at it. So she went over to India during the war. She was actually evacuated from Malaya. She was actually studying medicine in Singapore. And she got a ship. And she landed there. So what am I going to do? She said, okay, I'll take up nursing. So she registered as a nurse, got trained up, got a certificate, and then eventually when the war was over, came back. But she could speak perfect Tamil. And my wife, my mother was very fair, very European-looking lady. And when she went to these estates, the Tamil guys would try talking behind her back. She'd turn and fire them in Tamil, and give them the shock of their lives. She taught me about altruism, and giving, without asking back. And I've always held that very close to my heart. I think it's important. You don't go waving your banner or posting your success on how good you are to other people. You just do it and get on with your life. It gives me nothing greater joy than to help people on their way. Anytime any of my staff do well, or they leave me to go for a better job, I applaud them.
Great.
Because you can leave the nest now and go and spread your wings somewhere else. If you learned enough here, then please go. Don't stay on my account. I think you have better things to do. And a lot of them have done very well. They've gone ahead and started their own companies up and been very successful. More than me. They earn more money than I have. And I don't regret a minute of it. I will take the view that if anyone needs help, I will tell them anything. I don't keep secrets. I'm a very sharing person in everything I do. If there's something I know, I teach them. Okay, and it's very much like the White Flag campaign we did in Klang for the Kiwanis, the recent for the poorer people in our community. We studied the whole social media platform thing and started to go into creating a payment portal and crowdfunding model. I never done it before. And it's fascinating what the power of the internet can do, even for your business.
Yes.
I don't know if you've even tapped partly trying to reach your target audiences and becoming a global superstar. So it'd be interesting to see, I'm currently, as I said, my lifelong learning project, I never stop learning. I've signed up with an MIT course to learn about social media.
Wow.
And I'm halfway through it right now. It's fascinating. So much to learn. And a lot of the things I'm learning that I'm applying to both my business as well as to my charities. Getting people to understand, they call it the attention economy.
Oh yeah, that's right.
Lovely word for it, attention economy. Yeah. And there's so many interesting stories inside that you learn how the Russians took over Crimea without firing a shot.
Oh yeah.
Social media platforms.
Yes, that's right. Or how Trump got elected using Facebook. So
something like that.
Yeah.
Targeted messaging and things like that. The understanding of the powerhouses that exist around us, fascinating.
That's right. That's right. Probably this is one of my last questions, unless MJ has some questions, is so Alistair, your son, is part of it's together with you in your business, and probably 2 questions. One is, what do you think are important values today? I mean, today the academic route is very, very competitive. I was telling my daughter, ironically, 3 days before this chat, I had a conversation with my daughter about what I do online, what I invest, and I gave her basic concepts about stocks. And she said that no, this is a boy thing. You know, I want to do my arts. I said, yeah, you can do your arts provided you have financially sound management, right? So, what were the values do you think you would want to inculcate to your children on getting them better prepared for this, this VUCA world today? Yeah, on top of the academic smarts, on top of being doing well, getting a degree. What do you think skills that matter going forward for your children?
I think being relevant in today's technology. I mean, you never stop learning. That's my lesson to them. I mean, I always say it to me myself. All I learned in university, we had to look things up in books. Use only 2% of what you learn. Seriously.
Yeah.
It's a nice 4-year paid holiday by your parents. You learn other social skills like, going out for drinks with your friends, or, seeing the world and doing all that stuff.
And meeting girls as well, right? Meeting girls. Yeah, right.
The important thing is that, you learn social skills. And don't forget, social skills are a very important part of life now. People with good EQ get ahead of anyone else. Being liked by a bigger crowd of people gets yourself promoted, because that's the kind of persons companies seek out, influences and people who can sort of shape decision making.
Yeah.
Yes men are definitely out of the way. So I always teach my son, to keep on learning, never stop learning. And I hope he's going to do his MBA next year.
Oh, yeah.
He's signing up for the one at the Asian Business School here in KL.
It's
part of MIT Sloan, which is great. It's a great institution. So I said, you can't see, CEOs aren't born. They basically have to study their way up there to certainly say, you must understand all the bits and pieces. Although having said that, I believe, was it Simon Sinek said, they should never call people CEOs. They should be called CVOs, Chief Vision Officers.
That's right.
So the important role, what I learned very, very early on in being a CEO is that it's not about managing people, it's about leading them. And people forget that. I never was a micromanager. I trusted my people implicitly to finish what they were supposed to do, but led them. If they needed help, provided for them. If they wanted something, I'll get it for them. If they needed training, I'll provide it for them. If they needed budgets, I'll fight for them.
Wow.
If they felt they needed a raise, I'll fight that for them as well. Okay, provided it was within the budget, and I can manage it. So I think we had a very good understanding with the people I served with, and I'm grateful to them to the end of my days. I worked with some wonderful people in my lifetime, no regrets. And I think my children are learning that from me in a way, and hopefully they'll understand, that success comes from a number of different channels. Okay, attitude, kindness, politeness. Okay, doing the right thing, working hard, not giving up. Okay, and those kind of qualities you try and inculcate in your children. You can't teach them stuff. They learn faster than you.
Yeah.
So whatever your kid wants to do, also the old adage, gentlemen, say you're in school, okay, and you come back with a bad grade in math, but you get an A in literature. What does your family do? They send you for math tuition.
Oh, yeah.
And they forget the fact that if they sent you for something where you can learn more about being great in English literature or writing a novel, I mean, that would be your strength, right?
That's
they
right.
always build on your weakness. You know why families do that? They always keep building on your weaknesses. You're not interested in math. What are you good at? You get the multiplier effect on what you're good at, not try and drag you up for something you really hate. You'll never be good at it. Whatever you don't like, you'll never do well in.
I think MJ has a lot to add based on the last statement.
I think that's why so many of us who exactly experience what you just mentioned are, to use a British slang, right? Bang average, right? So yeah, but I love what you said, because I relate to that a lot, because it ties into the education, because if people are only focusing on their weaknesses, so they become essentially mediocre in many things.
Yeah.
And so that when they enter the workforce, like, companies have no clue what they're good at.
Yeah, I know.
You know what I mean? So yeah, I really love that. I only have one last question, right? And in your very long and illustrious and interesting journey up to now, whether in life or business, right? How would you summarize the 3 biggest discoveries and lessons that you wouldn't have discovered if you didn't take the path that you've taken?
one of the first lessons I learned as an engineer was with an American engineer who came over and was part of our licensing body. And we had to test the sound of an air conditioner. Back then, everyone needed very quiet air conditioning. So we developed one. So we were testing how loud it was. So I got this piece of equipment and we did all these tests for 3 days, okay? And they gave him all the results. And he said, did he calibrate it? No.
Okay.
MJ, experience is a collection of your failures. Okay. Always remember that. If you fail at something, you've learned something. If you don't fail at anything, you never learn anything.
That's true.
You know? That's why people who live with their mothers to old age think they're perfect, because their mothers keep telling them you're perfect. Get married and the truth comes out.
That was such a wonderful story.
Yeah.
That was the first lesson. Other lessons, I mean, a lot of people have influenced my life. My parents were a very big influence in my life, yes. My wife was a big influence in my life. She taught me all about education with kids, you know. She was so good with them. And she had huge empathy with what she was doing. She taught me how to cook. Just another very important lesson in life. Feeding yourself was a very important lesson. But yeah, it's, and of course in business and things like that, you know, the partners I had were very, very good at what they did. And I learned a lot from them. And never be afraid to learn from other people. Doesn't make you look stupid, it makes you smart. I always ask stupid questions. If we don't understand something, I'll ask people to explain it again. Because there's no point going around nodding and saying, I understand what you said if you don't. Always ask questions if you don't understand something. I mean, that's a very important thing you should learn to do. A lot of kids don't do that. You know, they go to lectures, they go over their heads, and then suddenly, everyone okay? Yeah, everything was good. What did he say? And they quickly feverish trying to work it out at home, but it's not the point. I mean, engage, you know. And I think soft skills, which I learned a lot of from being in the NGOs, managing people. NGO is the best fertile ground for management. Because how do you get things done by people you don't pay? First lesson, it's the ultimate motivational. You know how to push buttons and get people to do things, how to make people do things for you.
Yeah.
Without having to pay them. You know, normally the old thing was, you know, I pay you, you do something. That was the old stick and carrot thing. But getting people to work for you willingly without compensation is a true skill. I can't say I've got it yet, but I keep working at it. No one's perfect. But at the end of the day, I always say, at the end of everything, you must have lived a life that's worth remembering.
Wow.
Okay. Just remember that. You know, when you're gone, how will you be remembered? That's the question to ask yourself. What good have you done? What bad have you done? What legacy have you left for people to think about? Not exactly want to have a statue of yourself anywhere, but I think it all boils down to how kind you've been along your journey, helping people along the way. That's basically human kindness. I think it's the most important characteristic of anyone that I can think of.
Great.
Amazing.
Love it. Yeah.
Sorry.
Love it. Yeah, love it. MJ, any more questions?
No. Any more questions would ruin the mood, really. So.
Yeah, that was the high already. That was the hit the note right. So, Dato Stewart, where can people find you?
Well, you can share my email address with anybody you want. They can write to me. I'm happy to answer questions. I always left my door open. In fact, when I was doing my road shows with Access, I always spend time milling with the unit holders.
Great.
I spent time chatting with them, answering their questions, thanking them for coming. And I did that naturally because I was appreciative of what they did. They took the time out to come and listen to what we were doing and ask questions. I think that alone requires recognition.
Great.
I think that's very important.
Yeah. So I know they can find you on LinkedIn. I'll leave an email in the link below for them people to find you.
You can send my Gmail address if you can. I'll send it to you.
Yeah,
that's
sure.
all other email account I use because I don't want to clash with my company account because
you want to flood it.
Not enough as it is. And trying to filter through various emails that are not relevant to business makes it difficult for me.
Great.
So I'll send you my Gmail. Have you got my Gmail account?
No, I think either that or maybe do you have a social media account that, at least it helps filter the guys?
I'm on Facebook, but never post anything. So don't bother going there. I don't post anything. On LinkedIn, my posts are very sparing. Okay. Unless it's an exceptional story I wish to share with people, I'll share it.
Yeah.
No brag sheets there at all.
Yeah.
So I keep it very quiet, but I use it as a source of information for my own business, because a lot of people post some very interesting things there, what's happening in the markets. So it's an interesting vehicle. I think of all the social media platforms for business, LinkedIn is probably the most relevant one to me.
Yeah.
Okay. Facebook is the least.
Okay, great. I think the best way is get on LinkedIn, find Dato Stewart LaBrooy, and it's LABROOY, guys. So
it gets murdered. I tell you the truth. That's all
exactly. Dato Stewart, it has been an absolute pleasure. Too bad, I really wanted to get you into the studio. Then it would have been much more fun, and then we could have have drinks after that. But yeah. So MJ, any last words for Dato Stewart?
No, I really I mean, it's been such a pleasure to not meet face to face, but at least virtually, essentially a pioneer in the industry, right? I mean, how often do we get it? We don't get to meet the Lim Gotong of the REIT industry.
You're too kind. You're too kind. Seriously, it's I was the right guy, the right time, the right place, and it just happened. It was just all by accident in a way. The fact that it happened the way it did, it was just purely a series of things that fell into place at the right time. And the timing to market was actually spot on. Yeah. It grabbed the mood that made a lot of sense.
Yeah. Stay safe, Dato.
Thank you, John, for inviting me on this call. I enjoyed chatting both of you. First time meeting MJ face to face. You're from KL, MJ, or you guys go back a long way?
I'm from PJ. Actually, my place is near the one of the Axis buildings
Axis.
in Asia Jaya. There, it's about 10 minutes from Asia Jaya.
Oh, okay. I think I know which one you mean.
Yeah. Right. So, to all the listeners, I hope you have enjoyed this as much as MJ and I have done. And thank you again, Dato Stewart. So see you guys in the next show.
Pleasure.
Thank you very much, John. Say good night now. Bye-bye.
All right. Bye-bye.